Hello, and welcome to the Lever Report, a weekly video newsletter for human-centric leaders to navigate the week ahead. I'm Drew Fortin, here with your latest update for the week starting Monday, May 26th, 2025. Tariff tensions continue. More on the great managerial flattening in tech, why it's critical to play in the early innings of AI, and using AI as a strategy sharpener. Here's the news to make your week. The markets finished last week in the red as trade tensions re-escalate. On Friday, the Dow, S&P 500, and Nasdaq all registered weekly losses exceeding 2%. This downturn was heavily influenced by renewed threats from President Trump regarding tariffs. Trump specifically targeted imported goods from the European Union, threatening a 50% tariff if trade talks remain stalled, set to go into effect on June 1st. Furthermore, President Trump issued a strong warning to Apple CEO Tim Cook, demanding that iPhones sold in the U.S. be manufactured domestically or face a tariff of at least 25%. This tariff threat also extends to other smartphone manufacturers like Samsung. Apple shares, which have already been shifting some manufacturing to India, fell nearly 3% on Friday. These protectionist stances are creating significant supply chain complications for companies already grappling with the economic uncertainty. Investors are also concerned about the deepening U.S. deficit anxiety, which has pushed up Treasury yields with the 30-year yield holding above 5%. Next week's trading will be shortened due to the Memorial Day holiday that we're in right now. Now, this is important. We talk about this every week. These shifts, there's so much back and forth, up and down. It's really hard to predict anything. Businesses are going to do really well by staying true to their vision, by staying true to their strategy, by picking a strategy, sticking to it, and remaining vigilant and keeping costs under control. That's the only way to move forward. Big tech is making bold moves to boost efficiency by shedding layers of middle management. This is a trend we've been covering for the past couple weeks and has had many articles extensively in Business Insider. Companies like Microsoft, Intel, Amazon, and Google are actively, quote, flattening the middle to reduce bureaucracy and speed up decision-making. This strategy aims to increase manager span of control, allowing more individual contributors to report to fewer managers. Now, this logic, it's sound. In an exponentially changing world, agility is key, especially with AI. And removing hierarchical layers can empower those closer to the customer or technology to make faster decisions. While some employees are applauding the shift, experts caution that taking it too far could lead to issues like increased reporting burdens and more meetings for remaining managers. Now, it's clear that flattening an organizational structure is not a one-size-fits-all solution. And the success of the strategy heavily depends on existing cultural norms and operational maturity of a company. Many tout NVIDIA CEO Jensen Huang, who famously manages 60 direct reports. Think about that. That is a stat unheard of. Now, while impressive, it's crucial to remember that NVIDIA, they've been a trailblazer for over 3 decades. The company is 32 years old, allowing ample time to establish deeply ingrained processes and a culture that supports such a flat hierarchy. So for many organizations who are enamored by that stat, suddenly adopting such a broad span of control could be disastrous. Leaders should carefully assess their unique organizational context, the complexity of their work, and the capabilities of their teams before drastically cutting management layers. The capabilities are so important. The managers have to know what to expect and have to be comfortable making decisions autonomously, also be comfortable raising concerns in a different way. Now, the goal isn't just fewer managers. Clearly, that we're talking about more effective leadership that can truly develop talent and drive results. While the recent market news highlights volatility driven by all the tariff talk and deepening U.S. deficit anxieties, a crucial undercurrent for leaders to track is the evolving role of AI in the workforce. New research from the National Bureau of Economic Research, authored by Anders Humlen and Emily Vestergaard, suggests that despite widespread adoption and significant employer investment in AI chatbots, their economic impact on earnings and hours remains minimal so far. Average time savings are modest, around 3%, and haven't yet translated into notable wage increases. This indicates we are still in the very early innings of AI's integration into the workplace, emphasizing that AI is a tool for augmentation and innovation rather than an immediate productivity panacea. However, the nature of AI itself is rapidly advancing. An article in Harvard Business Review by Jen Stave, Ryan Kurt, and John Windsor points to a significant shift. Agentic AI is moving beyond simple tools to become a genuine digital teammate. This isn't a future concept. Companies like Deloitte are already integrating AI agents into nearly every enterprise process. Mercer just last year took their head of HR and made them a chief people and digital technology officer, hinting at this merge of hybrid skills between humans and technology as well. So for leaders, the critical takeaway from both these perspectives is that inaction regarding AI is a tangible business risk. The integration of AI into your workforce, it's becoming a strategic imperative for attracting top human talent, outscaling competitors, and meeting evolving governance demands. Simply put, AI is now the baseline. You need to be involved. This means proactively mapping out work tasks to assess AI capabilities, redesigning business models to include AI alongside human talent. Many are calling this the new hybrid work, and critically establishing clear legal and ethical ground rules for AI usage. Now, the productivity J curve effect suggests that early proactive investments in training and customized AI solutions, coupled with a culture of experimentation, will position businesses to drive meaningful performance improvements as AI continues to evolve. Your role is to foster a human centric approach, leveraging AI to handle mundane tasks while elevating the high value, uniquely human contributions that drive differentiating value. So, although we may not be eking out the gains that are equate to the investment we're putting in AI right now, we have to be consistent. We have to be persistent in its use. Those that do that will find themselves far ahead of the competition in just a year's time. New research published in Scientific Reports by Yang Pu, Hao Li, Wenya Ho, and Zijin Pan reveals a groundbreaking approach to corporate strategic decision making using a hybrid AI optimization model. This innovative model combines transformer models and reinforcement learning algorithms to enhance accuracy and efficiency in a dynamic market environment. Now, what does this all mean? It means that we are using an AI model to help us make decisions. And traditional models, they often fall short due to reliance on subjective data that's needed and limited data processing capabilities. This new study demonstrates that this AI-powered model successfully converges quickly and shows significant advantages in predicting market share with 92% accuracy, profit growth rates, 91% accuracy, and customer satisfaction with 89% accuracy. So implementing these AI-driven recommendations has led to notable improvements in market position, brand influence, and technological innovation capabilities for businesses. This new research is compelling. It's proof that we are no longer in a world where the best idea simply wins. It's about the thoughtful, data-driven execution of the idea. And AI is offering a powerful means to sharpen our strategies. Imagine programming an AI model with your business's mission, vision, and values, and strategic priorities. Then training your managers to leverage it for decision-making or seeking strategic advice. This approach could transform meetings, significantly reducing unproductive debates and arguments, and allowing teams to focus on progress and taking action. It's an incredibly exciting time to be a leader, as these technologies empower us to achieve new levels of strategic precision and impact. And that's your Lever Report. Check the show notes for any articles or research we covered today. And if you're enjoying the content, please show your support by liking this video and subscribing to our channel. Please do ask us questions, share your thoughts in the comments. I look forward to hearing from you. I hope you have a great week, and we'll see you on the other side. Bye.